solutions to increase profitability and productivity in the Nigerian lending space. We have on the call two speakers who are Samuel Ogukoye, product manager at Periculum, and Mr. Ayo Adeonipeko, the principal partner of Corporate Consult and Associates. And to introduce them, I will start by introducing Mr. Ayo, who is the principal partner at Corporate Consult and Associates. He's an alumnus of Lagos Business School and is also currently undergoing his PhD experience at PhD studies at Olabisi Onabanjo University. He's also a member of the Fellow of the Institute of Chartered Accountants of Nigeria and an associate member of the Chartered Institute of the Stockbrokers and Chartered Institute of Taxation of Nigeria. I would like to add that he's also a licensed microfinance banker as well, and the chairman of Ayo Adeonipeko Foundation, an NGO that focuses on financial literacies and client protection. And for the second speaker, I would like to introduce Samuel Ogukoya, who is an accomplished product manager with over 5 years of experience, including 3 years focused on product management in the financial sector as well. With a passion for driving innovation in the lending industry, Samuel stands as a visionary at the helm of Periculum. In his role as product and partnership lead, is the driving force behind the dynamic product development and strategic collaborations that are reshaping the lending sector. And I would like to add that Periculum is the leading artificial intelligence and data analytics company that serves clients in Africa and beyond. And Corporate Consult is also Corporate Consult and Associates is also a technology-driven professional consulting firm specializing in finance, information technology, and business strategy development as well. And we hope you enjoy this webinar. And it's going to start. Mr. Ayo, the floor is yours.
Okay, thank you very much, Fisayo, for that introduction. I think I want to welcome everyone again to this session, which promises to be an exciting one. And I will enjoy all of us. Let's be very attentive and let's feel free. I mean, in terms of when you have questions, I mean, to ask, so that one will be there to actually clarify any area that you actually need a bit of clarification. So be that as it may, we start taking much of our time. I'm going to start the presentation. I don't know whether you can all see my screen, just to be sure we're on the same page. Hello, can we all see my screen?
Yes, we can, sir.
Okay. Like I've been introduced, my name is Ayo Adeonipeko, the principal partner, Corporate Consult and Associates. We've been around for quite a while, and our focus has been in the lending space. I'm shaping things together. I'm quite excited to be part of this session, and Periculum as a company I've known, and I'm proud to actually associate with them. I believe after this presentation, you see that it really was your while to be part of this webinar that we are doing. So I think I must even congratulate every one of us for making it despite our tight schedule. Now, so in terms of outline, I'm just going to talk about 5 in terms of contents, do a bit of introduction, tell us a bit of who we are, I mean, as Corporate Consult, also talk a little about the power of automated data-driven credit solutions. I mean, what they can do for you. Then we'll move on to the specific benefits of this solution we're actually bringing, and I will quickly conclude. So moving fast now, we all know there's a common knowledge that I've been in the banking space for quite a while. I started banking for a number of years when a lot of things were being done, although there have been a lot of innovations, but I know there are still quite some number of things that have been done manually. But you know, one of the major challenges in those things is they are time intensive, and we do need a lot of labor intensive business model. You can imagine if you want to continue. When I started banking, I mean, we have credit officer, loan officer that started going up one-on-one. And you can imagine how can you actually achieve your outreach in terms of your growth. You see that you are going to be limited in terms of growth. So manual is not really the way, but we're in the digital world now. And you know, those bottlenecks, what has it done? he has brought paved way for emergence of a new category of digital lenders, which I know some of us are here or they are planning to get into. So, and what are they doing? I mean, we're in a digital world. We have a lot of customer data that we can actually leverage on, advanced analytics and lower cost digital channels, so that we can remotely deliver our products in seconds. I mean, without actually seeing or maybe physically going to those places. Now, you see, this growing availability of data, what has it done? It has presented unprecedented opportunity to both traditional lenders like banks and alternative lenders to make prompt, informed decisions to minimize their risk and actually optimize their lending operations without tying down huge amount of capital for IT infrastructure. Now, so why are we gathered here this afternoon? Is for us to be able to explore together, so that we want to brainstorm, we want to, showcase a unique product to you that is actually designed by Periculum. What is it? It's an innovative fintech provider which focus on AI. AI is artificial intelligence. That is where the world is not even going. We're already there now. I mean, the next generation credit decision model and the entire credit analytics solution. At affordable fee, one of the challenge or why people are running away from this kind of thing, they feel that it's at a very huge cost to get it. But I'm sure by the time we finish, you will say that yes, even with little amount of money, you can actually be a partaker and actually enjoy these benefits. So that's just by the way of introduction. Just to tell us a little about Compo Consult, like she mentioned earlier, a technology-driven professional consulting firm who specializes in finance, information technology, and strategy development. What's our guiding philosophy? I mean, we partner, we produce, provide creative and cost-effective solutions to organizations through partnership and collaboration with innovative fintech. Of course, Periculum is not the only one with a partner. We partner with a lot of organizations because we are well grounded in the sector, and it's easy for us to actually speak the language so that I mean, there can be synergy in terms of bringing technology and actually providing business solutions. Myself, we pride ourselves in the consistent delivery of superior business results to all our diverse assignments and briefs. What's our vision? That has been our vision, and we'll be striving to achieve that. Is to be a world-class provider of personalized, excellent and consulting products delivered with consistent customer satisfaction. We are official partner of Periculum, jointly working to make this unique platform available to you at an affordable price. So coming to the data-driven credit solution, like I said, I can't imagine any organization that you want to stick to being manual in this age of digitalization that we are. So you can see that one of the greatest challenges that we have, I mean, is the headache that one can have if you want to package loan, you want to do it manually, you want to be analyzing bank statements, you want to pull it. I mean, it can be like a nightmare. But the truth is that when you have a solution that can actually pull out data and analyze and automatically give you certain results, it makes life easy for you. So I try to say, what do you mean by data-driven credit solution? It involves the analysis of vast amount of structured and unstructured data to create smart features and derive actionable insights. This approach empowers financial institutions to assess borrowers' creditworthiness more accurately, tailor loan offering to specific business segment, and identify potential default risk. So, the artificial intelligence will make it to be able to predict that this borrower, if I give this person, what's the likelihood or probability that this person is going to pay back based on the history of the person. Maybe I should say this, coming from the Yoruba background, they said how Saturday will look, but on Friday, you will know it. So you can use what has happened in the past to actually predict the future. Now, what are the processes that are involved? 3 main processes. First, you automate. 2, you optimize. And 3, you personalize. I'm sure all these will be described in detail when Periculum Sam will be actually doing in presentation so that we don't take much of our time. But just to mention about automation. Hello?
Okay, what's the issue? On top of my workload,
okay, can we unmute ourselves if you are not talking so that we can have a very smooth session? So automation has to do with you are turning manual processes of reviewing your credit into an automated process, reducing the time it takes to respond and the amount of resources required. So automatically it's going to save your cost and it's going to make life easy. So you discover that these days, you don't even need so many loan officers to put them on the field, because the truth is that people can, on their own, actually apply for loan. Maybe they are the website, or maybe they are their phone. We are going to demonstrate all this to you as time goes on. In terms of optimization, you have to use bespoke analytical scoring to make better and smarter credit decisions, approving more loans and reducing default rates, which are part of the objective that a typical lender, of course, you want to, it's not a matter of how much loan you give out, but how much of them can actually come back. And finally, you want to personalize. I mean, gone are those days where you do one size fits all for all the loans that you give. I mean, based on everybody is unique. And in terms of the kind of product you want to develop or design for them, you need to be able to get those unique features for that particular person, look at their cash flow, and look at their financial status to be able to know what and what you need to provide for them. So that is, like I said, much more detail we provided by Curriculum in their presentation. I just tried to do a diagrammatic picture of when you talk about that data, why data-driven decision making is important. Number one, knowledge and innovation. Of course, you can't, we're in a knowledge world now. You need to continue to innovate. I think somebody said, innovate or die. If you are continue to do things in the old way, one may not even be able to survive. Now, when you do this data, it also enhances communication, because even somebody can apply. I had an experience sometime, I think it was GT Bank. I was in, I was outside the country and I just applied for a loan, and within seconds, my account was actually credited. So it was like a magic. Without visiting anywhere, you just apply, because they're able to pull a lot of statements, a lot of information, know your credit history, to know that whether this person can actually pay back. What about unrivaled adaptability? With this data-driven scoring solution, you can adapt. It can even be adapted. It can be customized to meet your own, because every organization have their own specific business model. I mean, LAPO model is different from Axiom or the one of another organization, maybe just to mention that. Then they also give you new business opportunities. I mean, when you are using data, when you're actually mining data, it makes it to provide the opportunity for you. And finally, continual business growth, because as a business, as an organization, you don't want to remain on the same spot. You want to continuously grow so that things can actually get better. What are the key benefits of the solution we're actually giving you? Number one, it will lower your loan origination or decision cost. Of course, I know typically what manual people do, you have a loan officer, tell them to go and collect the bank statement. The bank statement can be as much as 100 pages. Somebody will manually looking at each of the pages one by one, and it can be tedious. And at the end of the day, you waste too much time, and there is also prone to error. So by the time the system do it for you using AI, it makes life very easy for you. Number two, streamline your operations and give you greater outreach. Outreach has to do with the number of clients you can actually attend to at a particular point in time. And it makes it to be able to diversify your portfolio. I've talked about personalized loan offering before, but it's also improved customer experience. These days, especially we're in the era of Gen Z, people are, time conscious. I mean, they want the best. So you can't afford to continue to remain on the same spot without being an innovative organization. Now, one thing that this solution will do is going to improve your turnaround time. By the time they start demonstrating to you, you see that within seconds, I mean, you can get the feedback, yes, whether, is this person really qualified for this loan? Beyond that is qualified, how much can we give him? Can he comfortably pay back? Based on his antecedent, based on his history, based on so many factors that we are going to talk about later. So instead of doing it using rule of thumb, and we've had a situation whereby somebody is only based on when you're doing credit analysis, maybe you should have been given 500,000. Somebody approved 3 million. That's automatically default. I mean, that you are starting from the beginning. So this kind of solution will avoid those things. It enhances your risk assessment, risk management and compliance through enablement of analytics, transaction monitoring and risk data aggregation. And finally, It gives you greater customer loyalty as retention as a result of convenience. I mean, you can imagine the kind of convenience. Okay, I was in Istanbul then, and I was able to apply for a loan with GT Bank, and I was given just within seconds, and I was able to use it for what I actually want to do. So naturally, I may want to be glued to that bank because they be my solution provider. Now, I don't want to just sound, looking at the positive aspect of, technology again. Everything that, of course, there's always some challenges. Number one, issue of data privacy. I'm sure, and cybersecurity. I'm sure some of us are wondering, how do I keep my data to curriculum? What happened to the security of that data? Is it that that data can just be sent anywhere? Look at what is happening. I mean, somebody will be on loan. You never guarantee anything. Somebody will just assess you and be sending you that, hey, go and take to this border, or you have to pay. We are running after you. Curriculum is NDPR certified. NDPR means Nigeria Data Protection Regulation. I mean, there is a regulation in Nigeria that talks about data security to make sure that privacy is actually ensured. Which, I mean, curriculum is actually well covered in that. And in terms of data quality, they have actually built in appropriate protocols to ensure best data quality, because there is something that talks about garbage in, garbage out. If you get the wrong input, automatically the output might be a challenge. And finally, technology infrastructure. Of course, I know most of us that are in this webinar, we might be using different software, core banking application, and we are wondering, how do I integrate with my own software, particular one? This has been taken care of because with curriculum, it is seamless integration that will make your core banking application via API. And I'm sure they will talk more about it during their presentation. I think that takes me to conclude in this presentation, and by saying, the truth is that to compete in this increasing digital and connected world, lenders must be what? Customer-centric, inclusive, and agile. By harnessing the power of data analytics, lenders can now make smarter decisions. You can reduce your risk and optimize their operation, thereby leading to improved productivity and profitability, which was where we started from. We therefore urge you to join the league of forward-looking organizations, taking advantage of platforms that uses technologies such as AI-powered credit algorithm, robo-advice, blockchain, open API, as this is the future of lending in Africa, not even in Nigeria alone. It may interest you to note that the following leading companies, I'm sure most of us know Fair Money, Baobab, Sycamore, and Sterling Bank, they're already enjoying this opportunity. So Curriculum and Comcast are actually come in working with you to shape and scale the lending space in Nigeria in a unprecedented way. I will end this presentation by saying, change is inevitable and innovation is no different. Refusing to evolve with the market is a panacea for failure. Thank you very much for your attention. In terms of the next, just to show us our corporate directory, which I've talked about, and also just a bit of what you do. So thank you so much. It's been a pleasure talking to you. Thank you.
Thank you so much, Mr. Ayo, for such an insightful session. Thank you. I'm very sure that we all gained one or two things from your session. It was very insightful and very knowledgeable. Also, I just wanted to ask that like you mentioned data privacy during your presentation as one of the challenge, and we at Curriculum are NDPR certified, meaning that everybody's data is safe with us. But I just wanted to ask that how can lenders ensure that the privacy of their data, basically, when working with Curriculum or Consult?
Okay, so I think I mentioned it. Like I mentioned earlier, we have been in this space, and even before we decided to partner with Curriculum, we've done some bit of due diligence because we know particularly the banking sector is highly regulated, CBN and all those stuff. So there are some rules, there are some minimum standards that we will, before we even put a pen and say we want to support a particular organization, and we've done a bit of research, they've shown us the certification, and that's why you can be rest assured that any data you share with them is actually secure. And because they are also certified, because that's one of the first things we check, and they have to give us evidence that they're actually certified. So I think on that case, they actually all the people that want to subscribe, they actually covered. You can be rest assured that you're in good hands.
All right, thank you so much for answering that question. I'm sure it clarified a lot of things on the attendees' mind. And for the attendees, in case you have any questions, please drop it in the chat box section and we'll attend to it after the second speaker's presentation. Thank you very much, Mr. Ayo, for your presentation.
Thank you. Thank you.
And now, Damilola Lekon, you can drop your question in the chat box and we'll attend to it after the presentation. Thank you. And to introduce our second speaker, Samuel Ogunkoya, the product manager at Periculum, we'll be giving him the stage to share his knowledge and share his insights on lending and how to increase profitability and productivity in the Nigerian lending space today. Thank you. Samuel, the floor is yours.
Thank you, Fisayo. Thank you. Can you hear me clearly?
Yeah.
Yes, we can hear you clearly.
I hear you.
Lovely. So I'm just going to be sharing my screen and then I'll walk you through my presentation for today. Thank you very much, everyone, for joining. Like Mr. Ayo mentioned, we are Periculum. We are pretty much leading the charge as regards building data solutions for, in the African market space. Focus for today would be for the lenders on the lending space generally. And then I hope that we will be able to, get one or two thoughts from here and then move forward. A brief introduction. One of the major challenges we have in the Nigerian lending space would be, low credit penetration. Of course, many lenders are scared because of the high non-performing loans. And of course, like Mr. Ayo also mentioned, there is a grossly inefficient credit assessment process going on based on the over-reliance on the manual process. However, with all of this, from the high non-performing loan rates to the inefficient credit assessment process, we believe, and then it's been proven, at least based on anecdotal evidences from our customers, that data-driven solutions can address some of these problems. For a brief introduction, what the credit penetration in Nigeria really is. According to the World Bank, only 13.9% of adults in Nigeria have had access to formal credit from financial institution and private lender in 2019, as compared to our counterparts in other countries in sub-Saharan Africa, and even on a global scale, this is way low. And then one of the main reasons that one can attribute or ascribe to this would be the lack of reliable and comprehensive credit information. Now, I think the question on everyone's mind is, oh, well, we do have the credit bureaus. Of course, we have three private credit bureaus in Nigeria. They're all doing fantastic jobs. However, they only cover 14 million individuals and 40,000 businesses out of a population of 200 million. So you can see there's a big gap of individuals that they are not covering or do not have any credit information in the credit bureau, and of course businesses too. Moreover, the coverage for credit bureau is unevenly distributed across regions. So there are some regions where you have nothing, you have little to nothing for the information as regards the inhabitants of that particular region. Of course, this leads to scenarios like this. This is a grab from one of the social media networks where someone was saying, they can find their way as regards, taking loans from all of these lending apps, pretty much, loan company, because, like I said earlier on, the coverage for credit bureau information or the credit bureau data rather is pretty much low. So these people cannot be reported. And of course, scenarios like this lead to things like this, where, lenders, to a large degree, I would say, make mistakes in giving loans to people that are not supposed to give loans to, and then they have to, engage in, different tactics as regards loan collection and recovery to get their loan. Now, going to data as regards the non-performing loans in Nigeria, in 2021, March 2021, so it was reported that there's about $3.1 billion $1 billion performing loan in Nigeria, which is way higher than combined 10 states in Nigeria. Combined the IGR, this is way higher than what they have. And then one of the things we have also observed and we've also noticed is the stark difference between, you know, the non-performing loan rates post-lockdown recovery, that's post-COVID, and then, you know, pre-COVID. Before then, most of the guys have been hit the most have been in microfinance bank, especially unit microfinance banks. You can see from the data here, you can see about 28%, performing loans for unit microfinance bank, and post-lockdown recovery, you are seeing around 30%. This is way beyond the 5% that has been advised, by the Central Bank of Nigeria. Of course, some of the factors that are contributing to this would be we are all in Nigeria. We've had the good days, we've had the bad days, and we are currently enjoying whatever day it is at the moment. The macroeconomic shocks, the poor loan monitoring, and then down to what we think we can solve, the weak loan underwriting standards. Now, how do we do credit assessment in Nigeria? What are the current process of the underwriting process? I think Mr. Ari already mentioned that earlier. I'm just going to can you see my screen, please? Anyone confirm we can see my screen?
Yes, we can. We can see this.
Okay.
Yes,
Lovely.
we can.
All right. So the credit assessment process in Nigeria is pretty much manually focused. For those that are not in the credit space or are new to the credit space, when we say credit assessment, we are literally talking about the process of evaluating creditworthiness and repayment capacity of potential borrowers. This is a very germane factor or step in lending process beyond people just applying for loans. You really want to know, who should I give loans to? Who should I not give loans to? How much should I give to them that we enable them to pay back? However, like we've established, the process is largely manual in Nigeria. It's time consuming, it's costly, there are a lot of processes, attached to it. And for those that have switched to, some digital form or digital processes, there are still some steps that they are missing. They are pretty much just doing garbage in, garbage out. You apply for a loan, there are little to no checks are done, and then, they give you the loan. And then, of course, that takes me back to my 2 or 3 slides before now. You see them employing different tactics, to get their loans back. Of course, I would not blame lenders. They, of course, want to increase their loan book. They want to increase their loan portfolio so they can, do the good work of bridging the credit gap and, of course, make more money. However, there are some missteps in that, process. All of these factors come together to limit the scalability and profitability of, lending operations in Nigeria, which we are looking to solve by addressing them at the roots. Now, how do we want to address them? We believe that data-driven solutions can accelerate profitability and scalability for lenders. Some of the ways that we've had significant impact in Nigeria and the rest of Africa is by the use of our machine learning models that lenders have used to automate and improve loan underwriting, pricing, and monitoring. So, like Mr. Ari also mentioned earlier on, there are steps towards personalization. There are steps towards improving operational efficiency for lenders. One of the established ways to do this is by leveraging machine learning models, to optimize your process and to personalize loans that you are giving to your loan applicants. Of course, all of this leads to a faster, cheaper, and more convenient loan services to customers. You might think of it as, oh, I have to switch my course. I have to switch from manual to, an automated way, build models or, plugging into another software. With the myriad of all other softwares you have been plugged into already. But the good part of it is prevention is better than cure. You have to make preventions now so that by the time you are trying to get back your money during collections, you don't have to spend so much money for collections or recovery. Now, this all leads back to what we are also going to be talking about a lot on this call, which is alternative data sources. Leveraging the traditional data source, in this case, the credit bureau information, we have already established that, it can be quite limiting. And then we are thinking, which other way can we help lenders make better decisions? Which other way can we help lenders see, the credit reliability or the financial reliability of their loan applicants? And that's where we're looking at alternative data sources. Now, this can be used to complement traditional data sources like credit bureau information to provide, or to create more comprehensive borrower profiles. Just to talk about what alternative data sources are, what they really are, data sources that are not traditionally used for credit assessment. So you're looking at things like, mobile phone records, You're looking at things like social media activity, e-commerce transactions, utility payments, psychometric tests, things that traditionally you would not have looked at, like, okay, the bureau data, tax record, things that you might not have looked at, like, oh, this can provide credit information or credit profile for my customers, are things that, we are looking to combine together with this traditional data source to provide a richer, profile. In summary, what we are trying to say is alternative data sources in conjunction with financial data provide valuable insight into your customers or your loan applicants' behavior, preferences, income, expenses, and their social network. And this leads me to one of the products that we have called Insight. Insight is a bank statement analysis and credit scoring engine that unifies both traditional financial data and alternative financial data. So, like I've explained earlier, traditional financial data, we are looking at credit bureau information. Alternative financial data, you're looking at mobile transactions, you're looking at every other transactions or every other data sets that are not traditional. Now, what Insight has done is merge both together so that when you have an applicant, a loan applicant, you're able to have like a richer profile for them. So even if they are not under the coverage of the traditional financial data set or the credit bureau in this instance, you will still be able to profile them more accurately, and then of course give them loan where they fit in. So some of the lenders, some are even on this call, currently use our product. Then it's been working wonders for them. One of the testimonials we have is from Timothy from Fair Money. With the use of Insight, it has helped them reduce, their credit turnaround time. They've pretty much been able to streamline the process of credit assessment with, about a whooping 50% reduction. Now, of course, this increases customer satisfaction, increases retention, and of course, even mitigates risk in their own behalf. Now, moving on from Insight, we also build machine learning models that can help lenders make better decisions. But let's take a step back. What are machine learning models? These are pretty much just computer programs that can learn from historical data. Like Mr. Ayo did mention, it's Sunday that will be good. Of course, this will be quite apparent in the Saturday. So what the machine learning models does is, it looks at historical lending data, those that you have given loans to before, and then it is able to make predictions or recommendations based on the pattern and trend. So if someone else comes to take a loan, we build a model that looks at, those that have taken loans, platform on your bank or whatever products or services you provide, and then predict if these new applicants will be able to pay back and how much they are going to pay back. Now, this can be infused into your product, and then of course it helps you analyze large and diverse data sets to generate more accurate and granular credit score. So you don't have to rely on some subjective method of making decisions, as the case may be. You pretty much have something robust that has been mathematically proven. Of course, this can help you optimize loan pricing and then terms. Now, the thing is, many lenders are always in a rush against each other to say, oh, what rate is Fair Money giving today? What rate is Red Money giving? How can we crash our rate? And all that. We can help, with machine learning models, you can optimize your loan pricing models by personalizing, for each borrower. This can be that what you are giving to people in a certain sector or in a certain, segment of the country is different from what you're giving to other people in other segments. Again, this is going to be taking away the subjective part. Then, of course, reliance to what your credit decision models looks like. You're also able to detect early warnings of loan delinquency. So you don't have to wait to collections. You don't have to go and pick, your loan applicants generator at home or lock them into somewhere just because you want them to pay back. And I mentioned earlier as regards, personalized and tailored loan products. And the good part of it is, for machine learning models to work, of course, it requires data. Now, some lenders say, oh, we don't have data. We've not been lending for a while. Or, yeah, we've been lending for a while. We've not been digitally or storing our data. Then where do we go from here? Now, the good part of it is we are also able to build customized decision engines that do not rely on having extensive data sets. We customize all of these, decision engines. So your field agents, in case you're still using field agents, can go to the field, collect all of the data, the subjective data. It feeds into a customized decision engine, and it provides results. Now, you can have total control over it. You can have roles and permissions, so depending on how you have your organization set up. Now, this is just a fusion of all I've been saying as regards alternative data, from insights down to the machine learning models, down to customized decision engine. Now, the good part for us course, is we are a technology company. We are high up there in building technology, but we are also down there, talking to lenders, and we understand the fact that in as much as we want to adopt technology, we also want to see something that we can feel. We want to see something that we can play with. And most of all of our products are user-friendly. Besides the API integrations that we have, like Mr. Ayo also mentioned, we also have, GUIs, dashboards that, lenders can interact with, that can make the decisions, and then they can always fall back on, when they want to make, collection, when they want to make compliance checks, as the case may be, or when they want to confirm who they've given loans to and who they've not given loans to. High level, just to summarize and to close this out, there are obvious benefits for data-driven solutions for lending. Very clearly, increasing credit penetration, like I mentioned earlier, over-reliance on traditional financial data has excluded a lot of people. Now, bringing alternative financial data, the traditional financial data, improves, credit penetration, because those have been previously excluded or hitherto excluded and now included into the credit, consumption, as the case may be. We are also able to reduce the non-performing loans and credit losses because of, statistical method, because of, a robust data set. You are not just giving loans based on gut feelings now. You are not just, playing, gambles with your loan. You are now giving loans based on data sets are available, and then giving loans to the right people. Of course, that reduces the non-performing loans rate, and then it cuts your losses significantly. Of course, if you are able to cut your losses significantly, and you're also able to expand or your loan portfolio or loan book, that of course improves your profitability. And remember, models and products speed up processes. So that way the productivity of your loan officers or the productivity of the company entirely would be increased. And of course, you are able to lower your operational costs by moving away from the manual processes. I also mentioned earlier on as regards customer satisfaction. Now, if you're able to increase the credit turnaround time, if you're able to, give more loans to, you're able to give loans to more people safely, that way you are able to, like Mr. Edith mentioned, he had an experience. Now his loyalty has been stuck with that bank because, they were able to provide for him when he needed it. So all of these joined together pretty much improves your productivity, improves your profitability, and, is one of the things that we are pushing out there. So more lenders, beyond those that we have in our books right now, can enjoy some of these services. In conclusion, the Nigerian lending space is facing several challenges that, of course, are limiting its growth and impact. We've identified the low credit penetration. We've identified the high non-performing loan rates. I mean, every single day you go on social media, you are seeing it. People around us are also seeing it. And then, of course, we've also established the inefficient credit assessment process, which is largely drawn. And then one of the things that we have also established on this call would be that, data-driven solutions can help lenders overcome these challenges. Now, the good part of it is many of us on this call have even heard about that before. We've been exposed to it, but we really don't know. It just sounds nefarious. It even sounds esoteric. We don't even know what it really is. But what Periculum has done is, we've made it, more practical. What we expect you to do is, come on board and enjoy what, other lenders have been enjoying, to improve your processes, leveraging alternative data sources, leveraging machine learning models, to improve your risk management and customer experience. In sum of it all, we are committed to transforming the Nigerian lending space, and we believe that, driving, these data solutions can transform the Nigerian lending space. We are welcoming you we are asking you to join us on this ride. We want to help you improve your productivity. We want to help you improve your profitability in improving, the Nigerian lending space, so you can have a more profitable business, and we can have a more inclusive and sustainable lending culture in Nigeria. Thank you very much. I think I've been seeing a lot of buzz in the chat box. I would be willing to take your questions. Thank you very much, Saya. I think I'll take my first here.
Thank you very much, Samuel, for such an insightful session. It was very educative. I really learned a lot of things from your presentation. And also just to ask, because during your presentation, you mentioned about the non-performing loans doing roughly worse after the pandemic. So I just wanted to ask that how can these data-driven solutions help lenders navigate uncertainties and maintain profitability in unpredictable times, particularly in the Nigerian lending space as well?
Okay, so I think we'll do a drawback to why there was a significant increase, post-COVID. During COVID, there was a drop in, what lenders could give, because a lot of people were not even applying for loans, and lenders were also careful. Now, post-COVID, lenders wanted to push. I mean, that is the course of the business. We want to lend, we want to give money out, we want to make, help people and then make money. So there was a shift towards, should I say, an unusual, discharge of money into the sector, or into the into the sector. But on the flip side of it, what lenders did not consider would be, leveraging proper credit assessment processes. Again, you would not blame lenders so much. Like I mentioned, the coverage for credit bureau is quite low. But one of the things that I've established on the call would be a shift of, perception towards, yes, we want to give a lot of loans out, but we still want to do it in a very risk averse. Sorry, we want to manage our risk, as the case may be. And then one of the things that we've also established is some of the lenders that have even been using our platform have been able to give more loans. You trying to manage your risk does not mean you are going to be reducing the number of loans or the amount of loans you are giving out, so number of people you are giving loans to. It is more about understanding who should I give loan and how much should I give to them, and then leveraging alternative financial data. I'm going to go back to that because this is the source. Leveraging alternative data sources, combining it with traditional financial data has been established to help lenders increase their profitability and of course give more to customers. I don't know if that answers your question, or was I all over the place for you?
Yes, that answers my questions. Thank you so much. Thank you so much. And now we'll be going to and before we go to the question and answer session, I just want to make a notable welcome to Mr. Olusegun Oyekunle, who is the Managing Director of Osogbo Cooperative Credit Society. He's on this call with us, and I'm very sure we can also ask him some few questions, and so that he can share his experience as well. Mr. Olusegun Oyekunle, can you hear me, sir? Okay, I think we can get back to that. Can you hear me, sir? Okay, now just to get into our question and answer session, Damilola Lekon has a question. And his question is, my question is for the automate. In a rural area where data-driven system is a minimal rate is prospective customers in terms of credit assessments without the KYC check of credit bureau. Did you get that, or should I repeat myself, Sam and Mr. Ayo?
Please, if you don't mind repeating the question.
Okay, so he's asking that for the automate in a rural area where data-driven system is a minimal rate, how can an institution rate its prospective customers in terms of credit assessment without the KYC check of credit bureau?
Okay, so I think I'll take a part, and then Mr. Ayo can also, conclude. One of the things I would quickly say is we are not advising against bureau checks. We are only drawing out some of the limitations for bureau checks. We still strongly encourage bureau checks and all. So with that out of the way, again, the good part of it, or the sad part of it in this instance would be, even when you do bureau checks, you most likely will not find some of the information for these people. Like I mentioned, there are some sectors or some areas that do not have enough coverage. Now, I also mentioned earlier on that we built a product in an intuitive way to say we're not just relying on API, integrations and all whatnot. We have dashboards where customers or our customers can typically plug in their data. You collect your data from the field. We build models based on the geographical location, or we build a rule-based scorecard based on the kind of product that you have. So depending on what fits into your box, if you've been learning for a while, we can build a model for you and then, you know, package it as something that you can easily use, you know, over an interface. If you just started lending, or if you don't have enough data, we can, you know, work in conjunction with you to build, you know, customized, you know, decision engine that you can easily use. Perhaps you collect your data on spreadsheets or whatnot, you can plug it into it, or perhaps you collect it by hand, you can, you know, open up the interface and input all of the data sets. Again, for him, I think the good part of it is, you know, speaking with our sales team and then seeing what best works for you. Sorry? Okay, I will just quickly conclude. Speaking with our sales team and to see what works best for him, and then I think we can take it from there. Mr. I don't know if you have any addition to that.
Yeah, maybe I think Mr. Olusegun is on, so maybe we just, I think maybe probably is on the road. Maybe we just want to allow him to make a comment.
Good afternoon, everyone.
Good afternoon.
So I'm very glad to be here this afternoon, and I thank the two presenters for their contributions. You know, we are working with the grassroots people, and then there are ways we do our own assessments. We use integrity. We leverage on integrities, and then we use organization to really determine the assessment of each of the borrower. So we are not relating to individual. We relate via the organization, and each of the organization ensure that they carry out their due diligence in terms of credibility and integrity of the members who need the loan for. So it is based on that we do our own disbursement. Hello, I hope you can hear me.
Yes, we can hear you.
Yes, we can hear you, sir.
Okay, yeah. So apart from, you know, the AI is good, the credit assessment and credit score, they are all good. They are all good instruments because it will fast track a lot of things, a lot of movements. But at the same time, we still need human capacity building to leverage on. We must have a close relationship. As we are doing, the way we are doing our whole, we have a close relationship with organization that we know. So we onboard the organization, we ensure that the organization, we do a necessary documentation, and then we formalize all the legal process by which we can hold the organization to be responsible for any default that it may occur. So, and it is the responsibility of any organization now to do its own due diligence, to look at the age of the borrower, and at the same time to look at the integrity of that person, whether the integrity is at stake within the environment or within the community. It is based on that we are using it to leverage on in giving out loans to our customers.
Okay, thank you very much, sir. Yes, we can still hear you, sir.
Yeah. So that is how we. Hello?
Yes, we can hear you, sir.
Yeah, that is how we carry out our own assessment and due diligence to ensure that we are not for victims of defaulters whom I want to use it as an opportunity to borrow the loans and run away. And we also ensure that we train our organization, any organization we are bringing on board, we ensure that we train them, we educate them to really understand any of their members they are bringing on board. And they should do their own due diligence and their KYC assessments by know the house of the person that want to borrow the money. So, and they should also know the relations of that person as well. So all this, we use all this to leverage our own borrowing mechanism. And then we are thanking God because we are moving. And then, although, you know, we cannot predict what will happen to anybody. There are some circumstances that might be beyond our control, and that may be also beyond the control of borrower. And that is why every of our loan is being secured. We have an insurance for any of the loan that anyone is borrowing from us. So we secure our loan. We have an insurance. There is an insurance that is being paid on each of the loan that is being issued, so that in case of anything that's beyond anybody's control, the insurance company can come in that regard.
Okay, sir. Thank you so much for your insightful contribution to this. We really, really appreciate you, sir. And now, moving on to the next question. Isaac wants to know that if there's any recovery process using the AI products for loans.
Okay.
Hi, Isaac. Sorry,
Samuel,
I think I,
would you want
yeah,
to
I
take
think I'll
that?
just quickly take that. Yeah, so at the moment we are primarily focused on assessment. However, we do have partners that we work with that do offer some of these services as case may be. I think it would also be I don't want to take too much of our time and go in depth into the operations or the operational workflow. But I think you can also reach out to our sales team. If I can drop in the email address of the sales team as regards how we can take a step from there. So, but just to answer your question in summary, yes, there are they're not a plug and play service, but yes, there are, and we can our sales team can have a conversation with you as well as that. Thank you. Isaac, I think you can get the email address for curriculum in the chat box.
The email address, I'm sharing the email address now, and it's sales@periculum.io or my mail fisayo.shofo@periculum.io. You can take a screenshot of the curriculum contact and for couple consult contacts as well. And somebody asked that when you talk about integrity, are you telling us that all your portfolio is 70% healthy and not to mention 100%? Mr. Ayo, would you like to take that question, sir?
Well, the integrity, I think I need to also clarify. Is it talking about the integrity of the borrower or integrity of the system or of the data that is actually being inputted? So before I can respond.
I'm talking of the integrity of the borrower.
Okay.
I'm talking of the integrity of the prospective borrowers.
Okay. Okay. Yes, you can go ahead. Hello.
We don't have the facility.
Okay.
Hello. Yes. As we don't have the facility to determine the credit decision of each of the borrower, so we rely on their integrity as well, because we do it in such a way that any organization that we are relating with, they should have a prior contact and a relation.
Mr. Ayo.
Yes.
Yeah.
Okay.
I think
the person is talking about the integrity of the borrower.
Of the borrower. Okay. So let me just jump in on that. In credit, I mean, there are, particularly when you are dealing with the micro one, even the SME, character becomes very, very important. And the truth is that for the micro loan, I mean, for the SME, yes, most of them can be in credit bureau and all those stuff. But for those small loans, the truth is that you may check credit bureau and they may not be there. So how many microfinance bank or even MFI or even cooperative are actually uploading their data? But with what Periculum has actually got, there are some information you need to get manually, that is your officers still need to get. And once they input it, I mean, it can analyze, I mean, the person and be able to predict whether this person can actually, pay this money back, or does he have the capacity? Because number one, I talk about character, I talk about capacity. Those two things are important. Somebody may have capacity, but if he doesn't have character, and it's from the interview. Of course, you can't rule out, just like you rightly said, totally the issue of maybe manual intervention or totally, because, of course, we've seen what has happened to a lot of lenders. Nigerian market is a very interesting area. But no matter what you have done, you still need to do some bit of DD on your own to actually protect yourself. I'll give an example. I mean, I've been in the lending space for a number of years. And I remember then when we are training our officer, we tell them, how can you ask somebody what's your name? And the person is thinking. So you already know that this person is fraudulent. You already know that this person is not being honest. So for those kind of people, it's a no-no. Now, because some of those things, particularly people at a low level, you need to also be able to get some information. It is no information when you input it to curriculum. It will come up with whether this person, what is the credit score? Can this person actually get a loan? How much can they get? But you can't rule out the issue of, and how do you know integrity? When somebody is telling you, like I said, I've been to work in a bank where somebody, everything about him was fake. His name wasn't the correct name, his address, his phone number, his everything. So, or like lighter mood. Somebody asked me what's my name, I'm thinking, why can I forget my name? So you can know that something is actually fishy. So integrity is very, and it relates to character of that person. So it is important as lender. There's one thing we are taught when I started banking, that there are no bad borrower, but bad lender. What it means that if you're a good lender, you will have been able to sift out, you will have been able to recognize those bad borrowers, either from the form they complete. Deliberately, some people will not fit certain aspects. You know that something is actually fishy. So this technology is to work, in addition to what you currently have in the system. It's not that, okay, once you just say go ahead, you don't want to do, you still have to do some bit of analysis on your own. But what it has done, it has reduced all the manual work. Let me give an example. If I take a bank statement now, about 50 pages, you can imagine that can take an entry level, almost a day, for him to analyze, okay, what is inflow, what is outflow, at the end of the day, come up with a result. But with the system that we're using, once you input it, within seconds, it analyzes and be able to tell you that based on this information, this is the right thing, we're going to advise you. But even though you are advised, you can still put in some 1 or 2 blocks to the double sure. It's very similar to if somebody go to the embassy, US embassy, you want to go and take a visa. Now, as at the time you have filled the form, they already made up their mind whether they are going to give you or not. Your interview is just to corroborate whether their decision was right or wrong. So that's exactly what this data analytics that we're talking about is actually going to do. So integrity, fitting to character is very, very important, and we need to take that very serious in our lending space in Nigeria. Hello?
Can you hear me now, sir?
Yes, I can hear you.
Okay, so to take the last question, someone is asking what they consider to be a major factor affecting non-compliance with loan repayments is the high rate of interest, the high interest rates that is occurred on these loans. And at what rates do you think a lender can charge to be on the safe side?
Okay, thank you very much for that question. Incidentally, I've been a microfinance certified bank. I've been in the industry, and even international benchmark. What we are taught and what we know that access is more important than the price. If you look at the Nigerian environment, the kind of return people make is actually, it's unbelievable. So people will not mind, because at the end of the day, I can make 100% on what I'm actually. So for me, yes, there are some people that are charging so much interest, but that is not the major thing that is actually causing loans default. It can be a factor. I've worked in a place where we have a kind of data, 10 years data, and we mine it, and we're able to come up with. But number one thing that we lead to default is, number one, what is your business model? If you have a wrong business model, there is no magic you can actually do. Now, number two, there are people that you are not even supposed to give loan in the first instance. So no matter how you give them the loan, if you don't structure it very well, it's going to lead to default. Another factor is, dishonesty. Unfortunately, in this part of the world, people, I don't want to mention the name of the bank, but the bank that started credit card in Nigeria, they actually burned their fingers, because what they discover is they give people credit card. By the time they now go and check, you discover that where they claim they were living, they are not even living there. They just collected the money and actually disappear. So in Nigeria, people can tell you they live in Osogbo, whereas they may be living in Yaba, in Lagos. So your ability to be able to corroborate those things and actually reconfirm those things are very important. Now, if you give somebody who does not have a capacity, even if he have good character, there is no magic he can do. And that's why we used to advise our officers and tell them that you may have a friend who has lost his job or he doesn't have anything. What is the means of repayment? Collateral is a secondary thing, but most people, you are not in business of doing collateral lending. And it's important we get that one very clear. So if you don't do your loan analysis very well, there's going to be a problem. So interest rate is part of it, but you can also blame the people charging high. Because there's what they call cost of fund. The way you get your fund is also matter. This is the only country where I remember when those guys from abroad come around and we tell them we charge about 4 or 5% per month. They'll be wondering how. But in Nigeria, it's not a big deal because if you take an average guy that sells maybe gala in traffic, if you collect 100,000, 5% of 100,000 is just 5,000. Now he can turn that 100,000 to 200,000 in a month. So for him, it's not a big deal. Paying 5,000, you have actually done well for him. But what is more important is understand your model. Which market do you want to play? Do you understand that lending space? Because you cannot give what you don't have. Commercial banking is different from microfinance banking. Micro lending is different from SME lending. Now, so if you are able to be able to sift out, the bad borrowers and not give your loan to them, that is what is actually key. Of course, we can't rule out the issue of the economy. Of course, we all know what is happening now. Inflation and all those stuff. So if you are not careful with your lending, people will come and take money and they're actually using it to just feed. And at the end of the day, repayment will be a problem. In microfinance, we are taught that one of the things that people should use loan, for a business activity so that they can actually generate more income. But you don't use loan, for luxury thing. I want to go for vacation. Of course, for salary and that they can do it, but I'm sure people are even wiser. So many other factors account for high default in Nigeria. And this issue of identity, that's one of the major challenges that we have. No government have been doing a lot of things in terms of getting ways forward you can identify people. But at the end of the day, people that are even using phone, Nigerians are very interesting people. They can, if you think that you can, because they have the phone number, they will throw away the number and they go and get another phone to get another. So it is important that you put your own risk acceptance criteria inside the organization so that to know how you sift out the bad one and make sure that the only thing you are doing is quality loan, the one that will be repaid back within the appropriate period. Thank you.
Okay, thank you very much, sir. And to take the last and final question, if anyone has any question, you can send it to our mail at sales@periculum.io or fisayo.chofo@periculum.io, and we'll be sure to respond. The last question goes to Sam. The person is asking, does our solution have the capacity for qualitative analysis? And what kind of credit scoring is obtainable on the solution? And the question is in 3 parts. So the first one is, does the solution have the capability for qualitative analysis? What kind of credit scoring is obtainable from the solution? And what kind of collection or recovery feature is available on the solution? So Sam,
yeah, thank you.
Just answer that as we round up.
Yeah, so quickly and sharp, yes, the solution, can do qualitative analysis. Like we said, most often than not, many legacy microfinance banks and most, MFIs, and including those giving the semi-urban areas, largely depend on, qualitative data to make their decisions. So yes, the system is, has been used in a way to accommodate qualitative, data for credit decision. The second is the scorecard. For the scorecard, what we typically do is we work with your team to configure what you have internally as risk assessment criteria. So if you have been lending for a while, you already know what to look out for. We configure that and automate that, and we enrich it with other, data sources. So for those that, are new to it or pretty much need advice or counseling as regards this, we have a wide network of, number one, we have a wide network of customers that we've, worked with. So we've learned so far, we have expertise in the credit space, and we also have partners, such as Compu Consult. We can advise as regards, what to look out for a credit score. So again, in summary, what that means is we can, automate or configure what you have, or we can, leverage our expertise in, informing you on what to do. Just as a quick, background for Insight is able to pull out, things like salary for salaried individuals without relying on salary keywords like SAL salary. We're able to pull out things like gambling rates, existing loan amounts. We're able to build out things like account sweep, inflow irregularity for people that have been trying to game the system. So we are able to pull over 80 different predictive variables, from a financial statement, in this case a bank statement. For the decision engine, we're able to accumulate things like, or unify things like qualitative data and quantitative data to help make decisions. So all of this can go into your scorecard, and then on the other end, we also have the machine learning models that can also make predictions based on historical data, which can inform your scorecard. As the last question, for collections and recovery, yes, we do have partners, just like we partnered with we do have partners that we work with for collections and recovery. So for those that are interested in any of this, from the scoring to the qualitative data, and then to collections and recovery, you can reach out to sales@periculum.io, or you can reach out to fisayo.shofuwa@periculum.io, to have a more comprehensive conversation as you guys, and we can help you set up for success. Okay.
Okay, thank you so much, Sam, for that answer. Thank you so much. And just to conclude on this webinar, this has been a very insightful, educative webinar that has taught everybody on how to leverage on data-driven solutions to increase your profits as a lender, because non-performing loans are really not the best things for lender. So we just advise that if you have any question, if you want to know more about the product, you can just reach out to us at sale@periculum.io, or you can reach out to Compu Consult at info@compuconsultng.com. And we just use to round up, we just like to say a very big thank you to Mr. Ayo Adeonipekun, Samuel Ogunkoya, and Mr. Oyekule for gracing us with their presence and sharing with us so much knowledge. We are very, very grateful, sir. Thank you very much. And thank you to everybody online for attending and for asking your questions. If you have any further questions, please do not hesitate to reach us at info@compuconsultng.com or sales@periculum.io. Thank you, everyone, and do have a nice evening. Thank you, everybody.
Thank you. Thank you, everyone. Yeah. Thank you, Mr. Ayo.